Investing in bonds has long been considered a safe haven for those looking to grow their money without taking on too much risk. Bonds are essentially a loan that you give to a company or government in exchange for regular interest payments and the return of your initial investment at a later date. They are generally considered to be less risky than stocks, making them a popular choice for conservative investors. There are several different types of bonds to choose from, each with its own set of risks and rewards. Government bonds, for example, are issued by the federal government and are considered to be one of the safest investments available. They are backed by the full faith and credit of the government, making them virtually risk-free. Corporate bonds, on the other hand, are issued by companies looking to raise capital. While they offer higher returns than government bonds, they also come with a higher level of risk. If the company goes bankrupt, bondholders may not receive their full investment back. Municipal bonds are another popular option for investors. These bonds are issued by state and local governments to fund public projects such as schools, roads, and hospitals. They are generally exempt from federal taxes, making them a tax-efficient investment for those in higher tax brackets. One of the key benefits of investing in bonds is the regular interest payments that they provide. Unlike stocks, which may or may not pay dividends, bonds offer a predictable stream of income that can help supplement your other sources of income. This can be especially beneficial for retirees looking to generate a steady cash flow in their golden years. Another advantage of bonds is their relatively low correlation to the stock market. While stocks tend to be more volatile and can experience sharp fluctuations in value, bonds are generally more stable and less affected by market swings. This can help diversify your investment portfolio and reduce overall risk. When it comes to investing in bonds, there are a few key things to keep in mind. First and foremost, it's important to do your research and understand the risks associated with each type of bond. Make sure to read the prospectus carefully and consult with a financial advisor if you have any questions. It's also important to consider the interest rate environment when investing in bonds. As interest rates rise, bond prices tend to fall, and vice versa. This means that you may want to consider the current interest rate environment when deciding which bonds to invest in. Diversification is another important factor to consider when investing in bonds. By spreading your investments across different types of bonds, industries, and maturities, you can help reduce risk and increase the likelihood of achieving a positive return. Finally, it's important to have a long-term perspective when investing in bonds. While they may not offer the same potential for high returns as stocks, bonds can provide a stable and reliable source of income over the long term. By staying invested and reinvesting your interest payments, you can help grow your wealth over time. In conclusion, investing in bonds can be a safe and reliable option for those looking to grow their money without taking on too much risk. With a variety of options to choose from and a number of benefits to consider, bonds can be a valuable addition to any investment portfolio. By doing your research, diversifying your investments, and taking a long-term perspective, you can help achieve your financial goals and secure your financial future. Subscribe for more investment advice and start investing in bonds today.